Hi and welcome to another chat with the lovely ladies of Carter Ferguson. I've got Deb and Catherine, and you'll find them in Nowra, Gerringong, Kiama, Wollongong and Goulburn. Today we're going to talk about what we're seeing different, I guess, in the way of a deposit to purchase your property. What was once always 10% is now being sometimes asked to be modified, and also people using deposit bonds. So if we could just have a chat about what they are, the cost involved, and what sort of advice you give clients.
I think today's market is the prices of homes are so much higher than they used to be. So coming up with a full 10% is a lot more difficult for people starting out and even people selling and buying new property. And hence the government's first home owners grant trying to make it easier for people to get into the market. So a lot of purchases these days will ask for a 5% deposit to be accepted upon exchange. And a lot of vendors are agreeing to that condition. It means that if the contract is terminated due to the purchaser's default, the vendors will get to keep the 5% deposit, which is still better than nothing at all. And they can always sue for the remainder of the 5%. But in today's market, things seem to be selling so quickly and not sitting on the market. So reselling a property and having 5%
in your
deposit
is
not a bad thing.
Yeah.
So,
and just tell us a little bit about even banks now are coming forward to their clients saying, look, go and ask, can we submit a deposit bond? Tell us a little bit about those.
So deposit bonds can be used if you don't have a cash deposit, or if you've got your cash deposit tied up in some type of a facility and it won't be available until settlement. It can be a more financially beneficial way of managing the deposit. So pretty much a deposit bond is like an insurance policy where the bank will guarantee payment of the deposit should you default. So you need to have them approved by a bank or financial institution so that they are going to be underwriting the promise that you're going to make to the vendor that if you do pull out and you're not in a position to pay a 10% deposit as a default payment, that the person who has issued the bond will pick up that tab and pay that 10% deposit to the vendor. So you need to have a discussion with your bank or a mortgage broker about obtaining a deposit bond. The prices can vary, but most of the time they're a percentage of the amount that you want the bond to be. So most prices range, would you say, between $500 and $1,000 for a bond, depending on who you're getting the bond from and how much you need the bond for. So when you do get the bond, you need to make sure you get the right names on the bond. So the bond that you have needs to match the name that you want on the contract. So if you don't get that right, then you might find a delay in being able to align the bond to exchange, which may mean that you miss out on the property. So if you are known by a number of names, or you've changed your name due to marriage or divorce, make sure you've got the bond in the name that you want to purchase the property in, because it makes it more difficult to change that later. They also have an expiry, or a period of time for which they're valid. So if you get a bond for an auction, for example, and you miss out on that property and you start looking around and you want to be able to rely on the bond that you've already got, you need to make sure that it's actually still current, because a bond won't be able to be used if it's out of date. And often you may want to go back and get the property amended by the bond issuer so that the bond actually matches the property that you're looking at. So there's another thing that a vendor or solicitor may not be happy to exchange if the bond doesn't match. The other thing is it needs to be original for exchange. So you can't just send a copy through or scan it and email it and expect that to be valid for exchange. A vendor's solicitor would be crazy to let you exchange on a copy, or an agent if they're going to do the exchange on the basis that there's quite a lot of case law out there that if that's actually negligence to do that, and most people don't want to put themselves into that kind of situation. So you will need the original, not just a copy, for exchange.
And I think that goes for, if you're actually thinking of selling your home and you're going to be a vendor, that might be a question that we will be asking you. Will you accept a deposit bond? And so I ask you to talk to your solicitor or conveyancer, but we are seeing more and more of it. Remember, it is cash and it is held by your solicitor. So in the event that they do default or they don't finalise, it's as good as cash.
Yes.
So again, just another way that we're seeing paper money being transferred around to make things work. So hopefully you've got some ideas about the way that we're actually seeing, I suppose, deposits paid on property. And again, thank you for your time. Appreciate it.
Thank you.